The re-election of Donald Trump as President of the United States in 2024 is expected to have profound and immediate economic consequences, not only for the U.S., but for the global economy. With the support of a Republican-controlled Senate and significant gains in the House, Trump's second term has a clear path to enacting key parts of his economic agenda. Tax cuts and market reactions. A key focus of Trump's economic policy is tax cuts, and this is already reflected in the stock market's positive reaction. Investors expect his administration to favor corporate tax reductions and deregulation, which could boost short-term economic growth. Trump has indicated he plans to extend the 2017 tax cuts and even floated ideas like exempting Social Security benefits from federal taxes. However, this expansionary fiscal policy could deepen the U.S. deficit, adding an estimated $7.75 trillion in debt over the next decade, which could increase the government's borrowing costs and impact interest rates. Trade and tariff policies. One of the most impactful elements of Trump's agenda is his stance on tariffs. Trump has proposed a universal tariff of 10% on all foreign imports, with rates as high as 60% on imports from China. These tariffs would likely drive up the cost of goods in the U.S., impacting American consumers and potentially pushing inflation higher. Analysts suggest that a tariff of this magnitude could boost inflation by nearly a full percentage point, leading to potential adjustments by the Federal Reserve. For global trade, these policies pose significant risks. Tariffs tend to inhibit trade, which could harm exporters worldwide and constrain public finances. Emerging markets like China and Mexico would likely face increased financial strain, with Mexico particularly vulnerable due to Trump's ongoing stance on immigration and border security. The Mexican peso fell 3% against the dollar shortly after the election results, underscoring the sensitivity of these economies to U.S. policy shifts. Inflation and the Federal Reserve rising inflation is likely to prompt the Federal Reserve to respond with more restrictive monetary policies, potentially raising interest rates. Trump's tax cuts, coupled with high tariffs, could place significant pressure on the Fed to maintain higher rates to control inflation, especially as businesses pass on increased costs to consumers. The Fed's inflation management approach may impact sectors sensitive to borrowing costs, such as housing and construction, and put further strain on emerging markets that depend on dollar-denominated debt. Global impact on emerging markets and Europe. Emerging economies that rely heavily on dollar financing could face heightened borrowing costs, leading to a challenging environment as they contend with reduced exports and capital flight. In China's case, tariffs could force a reorientation of trade toward new markets, potentially flooding Europe with Chinese goods. This could lead European central banks, like the European Central Bank, ECB, to adjust their policies. J.P. Morgan analysts have suggested that if U.S. tariff policies continue, the ECB might lower rates further to support European growth amidst increased market volatility. Europe could also see an economic hit if Trump's administration scales back its commitment to NATO. The potential reduction in U.S. defense spending would require European countries to fill the gap, which could strain already high debt levels. Many European countries' debts are near 90% of GDP. This comes at a time when Europe is also dealing with the ongoing financial and security implications of the Russia-Ukraine conflict. Implications for the financial sector. Trump's deregulation agenda may extend to international agreements aimed at financial stability. For example, the Basel III regulations, set to take effect soon, were developed to make banks more resilient. However, Trump's deregulatory stance could lead the U.S. to withdraw or relax its participation in these measures, potentially undermining efforts to enhance global financial stability. Long-term effects. While Trump's economic policies may stimulate growth in certain sectors, the broader economic impact is mixed. The global economy could see heightened volatility as countries respond to the U.S.'s unilateral trade and fiscal policies, while rising interest rates and tariffs may weigh on American consumers and international trade. Financial markets, global trade networks, and emerging economies will closely watch the unfolding effects of this administration's policies as they adapt to an era of renewed economic nationalism and regulatory shifts. For investors and global economies alike, the next few years will be a critical period of adjustment as Trump's policies reshape both U.S. and international economic landscapes.